Good evening, ladies and gentlemen. Welcome to the Somany Ceramics Limited Q2 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Naveen Agrawal, Head Institutional Equities at SKP Securities Limited. Thank you, and over to you, sir.
Good evening, ladies and gentlemen. It's my pleasure to welcome you to this financial results conference call on behalf of Somany Ceramics and SKP Securities. We have with us Mr. Abhishek Somany, Managing Director, along with Mr. Kumar Sunit, AGM Finance. We'll have the opening remarks from Mr. Somany, followed by a Q&A session. Thank you, and over to you, Abhishek ji.
Good evening, ladies and gentlemen. Welcome to the earnings call. I think we also have our CFO, Mr. Shailesh Kirawat, online with us today. To begin with, just to give you an industry outlook, the last quarter has been very volatile in all fronts. We've had a muted market demand, so resulted in a flattish growth, in fact slightly negative. This was due to various reasons, specifically because of the supply chain disruption in Morbi. We had a 1-month outage. We were not participating in that, but there was a huge issue with the truckers. There was hardly any material going in, so no trucks were available. So we had a good 15-20 days of disruption in terms of volume because of that. We also had various other market pressures in terms of rain, etc. So those are generally there, so nothing specific. But otherwise, on a general front, there's been a muted demand from the market. One can't point a finger as to why. Geographically, I think north, south, east, west, all of them have been impacted. We being the strongest in the north as far as our volume is concerned, obviously it was felt a little less there, but otherwise the disruption was everywhere. It was also coupled with a clear slowdown which we're seeing in terms of interest costs rising because of that the real estate segment is going to get impacted, and I think that is all inflationary with the interest rates rising abroad and in India. That is going to keep being heavy on us for the next couple of quarters, maybe 6 to 9 months, or who knows more. The green shoots, of course, there were some very, very positive green shoots this quarter, which we will see the positive signs of that coming in the next following quarters and the year. That was that there were 3 things which happened. Freight rates have gone very, very low compared to what it was last year, which is the export freight rates, the ocean freight rates. Coupled with that, we've had a huge anti-dumping duty slapped by Europe on Turkey. And coupled with that, we've had huge inflationary pressures of gas costs rising way beyond what it rose in India in Europe. So all of these 3 things is opening up Europe as a huge potential for Morbi players, and this time also maybe for the organized players, because a lot of the Turkish companies and the European traders are wanting to come and buy from India, and India has virtually no anti-dumping duty. We were expecting a high anti-dumping duty, but we then managed to get it at 7% only, which is negligible. That has been clearly offsetted by the freight costs going down. This is the industry scenario. Morbi still is not completely back. About 150 players are still shut. They'll probably start opening slowly now. Gas has not gone up. In fact, there's been a little bit of a rebate in gas in Morbi. Otherwise, gas cost overall has gone up in the last quarter. So even they are seeing pressure on volume, but they're seeing a good amount of uptake in exports. And what we said initially, the exports should grow to about 17,000-18,000 from 12,500 from last year. Now coming to our numbers, as you can see, there's really no point looking at the H1 numbers because last year Q1 was muted because of the pandemic. So let's look at the Q2 numbers. We've had a 9.3% growth as far as sales is concerned, and we've had a flattish quarter as far as volume is concerned. EBITDA obviously has been hit. The maximum pressure on that has been basically on the power and fuel. That's the single biggest item which has hit us. We've not had any price increases ever since the beginning of the year. So that has clearly affected the margins. And because volumes didn't go up, that further affected the margin. In fact, we ran our plants at 100%. Looking at the opportunity where Morbi was shut, we should be able to push more material. That also did not happen in the same robustness as we thought it could be. As a result, if you could see, a lot of our cash has been moved to inventory. So our inventory has gone up from 34, 35 days to 45 odd days, give or take a day. EBITDA, as you can see, is being hit as a result of the low volume and also in terms of gas. The positives are that we've been able to move a lot of our units to LPG, alternate fuel. So in the quarter, one by one, we moved from one unit to 50% of the units now on LPG, and it's still work in progress. By the end of November, we would have approximately 60-62% of our units on LPG, which will definitely check the gas cost, and LPG is significantly cheaper today than natural gas. To give you a flavor and preempting a question, the overall gas price in Q2 was up by 5 rupees from last quarter, and more than almost 100% from last year, same quarter. Current prices, of course, have come down by a couple of rupees because of what, the Morbi. Gas rates have gone down, the GSPCL gas rates have gone down. Next quarter, we will see further reduction because oil has also come off and our LPG also should give us benefit. So our northern gas price was about 65, Morbi was also 65, and south was 75. Currently, that's come off, and it's currently hovering around the 60-62 rupee figure, which we believe should go down further during the course of this quarter. Sales have also, in October, we had a muted October that was expected because of Diwali, Dussehra, and various other festivals which all fell in 1 month. So that was again expected, coupled with the low growth any which way, the low demand any which way. So October was also muted October, but like I said, it was expected. So hoping for a better November and December in terms of sales and also in terms of gas pricing, although that would really show full results in the last quarter. We have been managed to secure some quantities, what we talked about last quarter in the south, which current quantities we have been able to tie up about 1.5 square meters per month in the south and the same amount of quantity in the north. So going more geographical, and that's the rationale which we discussed last time about why we divested in one of the Amora plants is because we wanted to go more regional. So that quantity has gone more regional, although it's an incremental quantity. The ceramic and the GVT is pulling away from PVT. PVT is down from last year, same quarter, 34% to 28%, whereas GVT is up from 28% to 33%, and ceramic has also gained by 1% from 38 to 39. Sanitary ware, bath fitting, like I said, the entire market was muted. So sanitary ware, bath fitting has also shown only a growth of 3% over the quarter, over last year, same quarter, YOY. So we've had 2% growth in sanitary ware and about 5% growth in bath fitting. But this sector is looking good, and our expanded capacity of bath fitting is already with us. I had mentioned that it will start in October, so that's already started. So that should start giving results this quarter and also last quarter. The average capacity utilization for tiles has been about 88% in last quarter, 45% in sanitary ware. Sanitary ware, generally quarter 2 is muted because one line shuts because of rains. Every year it's the same thing. Faucets has now moved to 93%. Our brand spend has remained at approximately 2% of revenue. It should be at the similar levels. In fact, from today onwards, we have a huge campaign breaking out on TV, and you will see a lot more of us even there. Otherwise, the 360 campaign has been flagged off from the end of last quarter. Our net dealer addition for H1, now this I can talk of H1 because it's not financial, that has been approximately 150. dealers which have been net added. As I mentioned, price increases, we did not take anything more than what we took in June, early July, about 2%, 2.5%, which was again up till June. After that, last quarter, we have not taken any price increases. Forward statements, we still don't have any guidance on margins, like I mentioned, because it's still extremely volatile as far as gas pricing and demand is concerned. But we definitely can say that the gas prices have come under check, and we should see a softening gas price regime for the next 6 months at least. Sales growth, we're still confident that we should be doing high double-digit growth between 15 and 20% in the high teens. So that is still on cards, and we're looking forward to a better 5 months, because these 5 months are a clean 5 months without too many holidays, etc., which disturbed a lot of the H1. So this is my overall brief on the Q2, and I would open the floor to Q&As, please. Thank you so much.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Participants who wish to ask a question may kindly press star 1 on your touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Please press star 1 to ask a question. The first question is from the line of Achal Lohade from JM Financial. Kindly proceed.
Yeah, good evening. Thank you for the opportunity. Hi. My question was, with respect to the supply side, has there been any impact of Morbi took a shutdown of 1 month in terms of the supply from Morbi eventually? Did it really lead to any price hike by the Morbi players or not at all?
So the outage which they took was to not get any price hikes, but they were wanting to create more demand in the market and also to check any further reduction. So obviously that has paid off from the point of view of no further reduction has taken place in prices since August, but they never did it for any price hikes. And as far as supply is concerned, all our joint ventures and all our partners, which are the partners from where we buy, have all started their production. Our outsourcing partners, I'm sorry.
Okay. So the JV plants were working, but the vanilla.
No, so the JV plants also, like I mentioned, we were not part of the outage. So the JV plants also were working till about 15th to 20th of August. But after that, we had to take certain parking over there or shutdowns there for the last 10 days because the vehicles were just not available for transportation. So I think they arm twisted the truckers there to not give us material. So although we did dispatch, so a good week, 10 days, we also had certain issues with production. But that was more purely because there was just too much pile up of stock because, the supplies were very little from Morbi due to truckers being not available.
So if I think through, given we will have inventories across our, warehouses, branches, etc., this supply from Morbi units to these warehouses shouldn't really have any impact on the sales volume for this quarter, right? I mean, I can imagine that there will be inventory down from warehouses.
We have enough material.
So
that's what you're asking. I guess that's what you're asking. Do we have enough material?
Yeah, I mean, what I was saying, you gave, one of the reasons for the weak volumes was the supply chain issues from Morbi in terms of truckers availability.
That was only because of August. We probably would have had a couple of % of growth, but otherwise the demand was muted. So that problem we will not have, but the demand is still muted. So that 10-15 days of outage was there for everybody.
Understood. And Abhishek, just one more question on the demand side. if you look at the real estate launches by the leading developers, they seem to be doing extremely well. Now, what I'm trying to assess is that where is this weakness suddenly coming from? Is that just the interest rate? Is there something else which is pulling the demand weakness? And how is it going to change in next month, two, or whatever?
Like I said, I can't put a finger as to how it is, where it is coming. All I can say is that, at the end of the day, the real estate doing well is a great sign for us, but then we start getting utilized for new production, new applications only a year, year and a half, 2 years after the new launches. So, and anyway, we are not very affected with the real estate directly because we're not, our revenue does not go too much into real estate, but I was talking more from an industry perspective also, where Morbi is very, very exposed on the real estate. So clearly they're seeing a slowdown over there because new launches and people are waiting to start building or waiting to start renovating is where we are seeing a slowdown. And as far as real estate is concerned, with steel, cement, all of that very up, there is a little bit of a delayed supply which they want. So there Morbi is seeing a slowdown. So overall, there is clearly a slowdown, but really I can't put a finger as to why. I can keep making analogies and keep making excuses that it was the rain or it was this or it was that, but that happens every year. There's no big deal. Clearly, Morbi outage was something which did affect everybody, but that was also, frankly speaking, kind of welcome. If it becomes a yearly feature, all of us can then follow suit and shut down plants for maybe 15, 20 days and take our routine maintenance then, rather than taking ad hoc maintenances. This time we were caught off guard because the truckers were also not available. So overall commentary is that clearly in the building material sector, if you see other people's results also, not tiles but others, there has been a muted volume demand across the board.
Right. And one more question with respect to the LPG. You have given a mix, but if you could talk about the, why not propane? Is there any issues in operating propane in terms of the quality or impact on the tile, etc., and the cost, for LPG? What is the price, effective price for HCM and for propane and for gas?
So propane and LPG pretty much are the same thing. It's just that in propane comes in large cylinders. Therefore you need a lot more space, and the PESO licensing takes much longer. LPG is much quicker because they come in smaller. There is an alternative of getting that in smaller bottles, and therefore we move to LPG from a time-sensitive point of view. There's no point getting propane 1 year down the line with the infrastructure and the licensing in place. So LPG we were able to do very, very quickly. As far as 2 of our plants are concerned, they are running on propane because we already had an infrastructure there. So to answer your question, today the gas price is approximately standard 65 rupees a standard cubic meter. And if I adjust the kilocalorific value between natural gas and LPG, which is what we're using, that comes to approximately 50 rupees, 52 rupees a standard cubic meter. So it's a good 10 rupees cheaper than natural gas. And it does not move in the same direction as natural gas. It does not follow it. It's independent of natural gas. So I hope I've been able to answer that question.
Yes, very much.
Mr. Lorde, I'm sorry to interrupt,
yeah.
sir.
I request you to
please get back in the queue. Thank you. Participants are requested to restrict your questions to 2 per participant. Time permitting, you may return to the queue for follow-up questions. The next question is from the line of Sneha Talreja from Edelweiss. Kindly proceed.
Thanks a lot for the opportunity, sir. Just a couple of questions from mine. Firstly, with regards to, you mentioned that you've been seeing.
Ms. Talreja, sorry to interrupt, ma'am. Can't hear you clearly.
Is it better now?
Yes, it's better. Thank you.
Yeah. So just wanted to understand that you have mentioned about demand slowdown a couple of times, and you are hopeful that in the next 5 months, of course, demand would pick up. Any signs that you're already seeing in the month of November, or is it too early to talk about? Like festive season is now gone by. Any progress that we are seeing now?
Yes and no. I mean, it's just been 10 days in November, so the whole hangover of Diwali is just going away with the traders and specifically with Chhat Puja also around the corner, so the east was also shut. So obviously it will be better than the previous month, but how much better? I guess, Neha, it's a little too early to say.
Still, what is giving you the confidence of 15 to 20% is what basically I wanted to arrive at in terms of growth perspective, the numbers in terms of volumes that you've mentioned.
So I said growth in sales, volume. Obviously, we're coming out of a low base last year, so H2 will be a higher base. So what's giving me confidence is that we've gone through many cycles with so many years in business, and we've seen some very poor years in the last 15, 20 years. And in every scenario, H2 has always been 10 to 15% better than H1. In the worst of years and the best of years, that's the kind of average. Between 7 and 14% is the average, which is better than H1. So that's the kind of confidence, taking some reference from what we've seen in the past. And we have seen fairly poor cycles in the past in the last 15 years. Every year hasn't been a great year.
Sorry, so just for clarity, 15 to 20% is volume or the revenue growth? I'm sorry.
Revenue growth.
Got that. Understood. And secondly, you also mentioned a lot about
But
the LPG
Sneha, on that, volume will also move up because we don't forget we have put 3 plants, so we are going to utilize that. So volume will also move up decently, very decently.
Double digit is what we can assume safely?
I would think so, yes.
Sure. Understood. Second question is regarding gas prices. Since you mentioned you're moving towards LPG, what is the kind of an average now that we can consider for Q3? Any rough sense that we can get?
Yeah, of course. I can only say what we are, the prices which we're getting now. Like I mentioned, 50% of our lines we have converted to LPG, and it will go up to 60%, and that's about it. 40% will still be exposed to natural gas. A blended average will be natural gas is at about 64 rupees currently, and the LPG is about 52 rupees. So you can take an average of 60-40 from that. I don't have a figure directly, but you can calculate it.
No, that's helpful, so we can do that. And regarding the falling gas prices, with respect to this falling prices that we are seeing now across the board, whether it be the gas prices or propane that we've already seen, any price falls that you anticipate Morbi to take or us to take? Will that be also a part, because this has generally been a fairly competitive industry? So do we see any price falls happening shortly, or because the lower margins players?
I don't think price falls will happen, because on one side export has picked up. The dollar is also giving them a lot of boost to lower freight, higher rupee dollar. So from that point of view, exports is really exciting them. And mind you, 50% of Morbi also has moved to LPG. So that kind of price decrease has already happened even there. So if you haven't seen a price decrease now, I doubt we'll see a price decrease later, because whoever had to convert to LPG has converted, and whoever cannot, maybe another 50-80 players will convert to LPG. So when the natural gas price is going from 64 to 60, is really not affecting, because the Morbi is already moved to that 52 rupee price. But prices will come off. I don't think prices will come off of GSPCL anymore, but I do hope and wish and pray that the south prices, which is we are exposed on spot, should come down, and there I'm completely on LPG, but that should come down, and we would be then moving back to gas. But in our northern plant is where the biggest delta is, because I am constraint of space. Therefore, I have not been able to convert the entire plant to LPG. We're still exposed to a reasonable amount in gas. There I'm linked, if you remember, we're linked to the crude, the 3-month moving average. And the crude last quarter, we were on the 3-month moving average looking at $120, $125 to a barrel, because that is what it was when the war started. And now we are looking at a 90 to 105 rupee range and going down. So my Qatar gas prices, which moved up from 48 rupees very sharply in 2 months, 3 months to 65 rupees, has already come off to 60 rupees. And I believe this will come off to 55 rupees in the next 2 months because of the clear moving average, which is now capturing a lower crude. So from a gas perspective, I'm really not worried unless a nuclear bomb goes up. That's a separate issue.
Understood, sir. That clarity was really helpful. Thanks a lot. I'll get back in the queue, and all the best.
Thank you.
Thank you. The next question is from the line of Aksh Vora from Praj Financials. Can you proceed?
Hello.
Hi. Yes, sir.
I just wanted to know, so can you throw some light what are the in the line item in the fifth comment of notes to accounts, we have mentioned that company has invested 40 crores in the right issue of subsidiary Somany Max Private Limited. Can you throw some light on the same?
Yeah, I'd let Sunit and Sailesh, either one of them, take that question.
Yeah, so this is towards the 170 crore rupee capex greenfield project, which board approved, last quarter, and it is in the process of commissioning. So the first promoter contribution by way of equity shares to the extent of 40 crore rupee has been infused, and that is what you are referring to, since it is 80% subsidiary. So 80% of 50 crore comes to 40 crore rupee, which is subscribed by Somany Ceramics, and another 10 crore rupee, which is equivalent to 20% shareholding, is subscribed by another manufacturing partner.
What is it regarding to? I might have missed out earlier.
Oh, yeah, you completely missed out, because it is the follow-up activity of the greenfield project, which is announced by us last quarter, wherein 170 crore rupee greenfield project of large format slab tiles would be produced in this plant.
Okay.
So, yeah, it would be a state-of-the-art manufacturing facility which would be producing very large format and slab size of tiles.
Okay, got it. Thanks for the clarification. Also, just wanted to know what would be our current capacity in tiles, 73 MSM, and after the expansion that we are looking forward, what would be the capacity by the end of the year?
So we are at 63 million square meters of own production, and we have 73 million access to capacity. As you know, 10 million square meters we buy from outsourced vendors.
Okay.
That remains the same, and this 4 million, Sunit, is 4 million, right? The max plant. So that 4 million, more or less 4 million will get added in middle of the second quarter next year. So about July next year, this 4.5 million would get added, which would push the capacity up to close to 77 odd million.
Right. I get it. And sir, what was the reason for low growth in sanitary and bath fittings? Because as I understand, we still have a low base in that segment, and probably, if I may not get it wrong, we could have seen some growth in that segment if, probably because of the low base. So what affected?
You're very right. It is a low base, and I think it's just been a very muted quarter in terms of overall demand. I think the dealers were also extremely cautious of buying because of price decreases, often price decreases across the board. So generally, it's been a muted quarter for most brands in the sanitary ware segment, barring a few industry leaders.
All right. And so lastly, where do you see margins improving? When do you see margins improving? I mean, going by your comments, I feel like the gas price would be muted or coming down in the next 6 months. So can we see a slight improvement in margins going forward?
Yes, logically, absolutely yes, but it will largely depend on how much volume picks up, because clearly gas prices have come under check. So the margins obviously from this quarter onward would improve. How much they would improve, I'm really unable to say, because it's still extremely volatile.
Sure. But we can see an improvement going forward from here on, right?
Yeah, for sure. Of course. I mean, like I said, the gas prices went up from 50 rupees to 64 rupees literally in a quarter, and it's come off already by 4-5 rupees. And this LPG is only going to help this further. So we should be looking at another 3 to 4 rupees decrease in gas prices overall, and next quarter maybe a little more. And like Sneha had mentioned, would there be a lowering of pricing from Morbi? That doesn't seem to be on the card. So I think if we are able to maintain this price of sales and gas price start coming off, obviously that will show up in the margin.
All right. Thanks, sir. I'll come in queue if I have more questions.
Thank you so much.
Thank you. The next question is from the line of Pranav Mehta from Equirus Securities. Kindly proceed.
Yeah. Thank you for taking the question. Sir, I wanted to understand on your comment that the branded players will also be looking at exports. So if you can throw some light, will you be aggressively looking at exporting at least in EU and the North American region, wherein Turkey was a very big player?
I'm sorry, who was a big player?
Turkey was a very big player.
Yes.
So
Yes.
Okay.
Yes.
Okay.
So I think what is happening is a lot of our old contacts which we had are where we supplied very little, and they used to buy a lot from Turkey, etc. They are flocking again towards India to see how much material they can buy. So I think this time there will be a decent amount of course, our bases are very low, so I don't mean that export will become my bread and butter, but it will definitely be much better than what we've seen in the past.
Sure, sir. And sir, my next question was related to the any update on the recovery of the one-off item that we had seen during 2019-20. So any update on the same?
I'm sorry, I didn't get your question.
Sir, the one-off item that we had seen in terms of employee fraud and all this. So any update on the recovery?
Yes, so we had mentioned that last time on the employee fraud, we have been able to recover half the amount, and the rest of the half is still pending in a criminal case. And the other fraud which happened, there is no further update on that.
Sure, sir. Thank you very much.
Thank you. Participants who wish to ask a question, kindly press star 1. The next question is from the line of Rajesh Kumar Ravi from HDFC Securities. Kindly proceed.
Yeah, hi sir. Good evening. I have a few questions. First of all, this 15% revenue growth outlook you mentioned for FY23 or H2?
23.
FY23, because first half itself, your number is up by around 30%, if I'm not wrong.
Yeah, but then we pleased the last year Q1 was on the pandemic.
Okay. So no, I'm just wanting to understand, is it the second half you are expecting to grow at a much slower pace?
Yes.
Okay. And second, on the gas cost, could you share the number across the three regions for Q2?
Yeah. Sunit, you want to give them I'll give you the basically, currently, the gas price overall is approximately 64 rupees. And if we see in the quarter, it will come to approximately slightly under 60 rupees.
So, sorry, for Q2, how are these numbers, Kasar, Morbi and AP?
64. Oh,
64 is you.
64, 65 in Morbi and Kasar, and 75 in South. So because in South we moved 100% to LPG, blended this year, this quarter should be approximately 59, 60, somewhere there.
Okay, as against 64 in Q2, we are looking at 4 to 5 rupees lower number in this quarter.
Yeah, maybe more. 4 to 5 rupees is clear.
Okay, that's quite a good thing. And this Amora capacity divestment, the current capacity that you're talking about will reduce by this much, 3 MSM?
Yes, but we've added the same capacity in other geographies.
Sorry, where have we expanded this?
I think, this we had discussed this very much in length, so maybe in the interest of everybody else, we can take this offline with you, because there's been a divestment and also a large increase in Amora tiles. So Amora ceramics got reduced and Amora tiles went up very substantially. So net there has been an addition, not a subtraction. We can take it offline.
Sure. I'll take this offline. Also, what was your comments on the sharp rise in inventories in September?
Sorry?
The sharp increase in inventories September end?
No, so we were running the plants at more than 100% capacity to get the advantage where Morbi is shut and we should be able to get extra volume, but that really didn't happen. So a little bit of inventory buildup has happened because of that. And also there's been a muted demand in quarter two, which also that also resulted in a slight buildup in inventory.
Okay, so it should normalize in subsequent periods.
Yeah, absolutely.
Yeah, great, sir. Thank you. All the best.
Thank you.
Thank you. As a reminder to participants, if you wish to ask a question, please press star 1 on your touchtone telephone. The next question is from the line of Karan Bhatia from AMSEC. Kindly proceed.
Hi, sir. Thank you for the opportunity. So what capex are we looking for this year and next year, and the breakup as well?
Currently, the capex, the big one is Max, which we already have committed for. Other than that, we haven't really announced any other major capex currently.
Right. And on sanitary ware and faucets?
We just did a capex. We doubled the bath fitting capacity. So there again, there is no massive capex other than balancing equipment, which we take as routine capex. So there's no major capex which has been announced as of now, other than the 40 crore rupees of various other balancing equipment, changing of printers, etc., which we do year on year.
Right. Yeah, that's it, mine. Thank you.
Thank you.
Thank you. To ask a question, kindly press star 1. The next question is from the line of Manish Mahawar from Antique Stock Broking. Kindly proceed.
Yeah, good evening, everyone. Abhishek, just specific to the industry, I think a lot of participants asked the question about the demand, right? Just wanted to understand what has changed in the 1Q to 2Q as the demand has slowed down, as I think we are witnessing across companies in the building material space, the slowdown. So what is the specific reason, or if you can throw light in terms of tier 2, tier 3 cities, which market you are seeing, specific any pockets where we are seeing this slowdown or muted growth?
No, I don't, like I mentioned earlier, I do not have anything concrete to point a finger at, which, for example, in October, we clearly have something concrete, which is all the festive things have happened in a single month. That generally is the case, but this time it's even more pronounced because both Dussehra, Diwali, Chhath Puja all happened in the same month. But that is again 1 month every year it happens. But for quarter two, speaking of quarter two, I really can't pinpoint anything which has muted the demand. We can keep arguing as to what happened, but I do not have a specific answer. I mean, we've spoken to various dealers, and some of them have to say that cash flow is an issue in the market, whereas our cash flows have been very good. If you've seen, we've only shaved off more of our DSO. But some people are saying walk-ins are low. Some people are saying it was extended rain. Some people were saying that we were waiting for prices to come down. Some people were saying that a lot of spending is happening. Priorities for this quarter after the entire world has opened has moved to other spending on holidays, etc., weddings, other purchases, auto. You've seen auto do well. But all those are things which are just hearsay. If you had to ask me, I really do not have any specific answer as to why demand has slowed down all of a sudden. But again, on the same breath, I would say that demand has slowed down, but we are in a sector where we are shaving off market share from all other products like natural stone, wood, Pergo, etc. So from that point of view, nothing is to be worried on a long term, even on a medium term perspective. But in a short term, I really don't have an answer as to what is happening.
Okay, and but in the sense in the retail project business or government side, across you are seeing a slowdown, or it's a maybe retail dealer side you are witnessing the problem?
Across tier 1, tier 2, tier 3 project, etc. I mean across.
Okay, it's a broad base you are saying completely.
Broad,
right?
yeah.
Okay, so what I understand, your guidance, we are looking at a double-digit volume growth in this year, FY23, and maybe 15 to 20% revenue growth for this year as a whole, right?
Yep.
Okay, and then lastly, what's your expectation in terms of industry, domestic and export for this year as a whole? maybe your any anticipation or understanding in terms of export especially?
In what respect are you asking? Could you
In the tiles as an industry.
No, true, but you're talking value, what are you talking?
Volume, whatever size perspective you look at, what is the last year FY22 size based on your assessment, and what could be your expecting?
I think we should be at a 38 to 40,000 crore rupee figure this year, industry size, out of which about 18,000 crore rupees would be exports.
Okay, so 22, basically you are expecting a flat type of industry growth from a domestic perspective, because I recall last year the same number was there, right, 22,000. A flat number we are looking at. So basically we are looking at for a market.
33,000 crores. You're absolutely right. 33,000 crores was the total industry size. Out of export was 12,000. 12,000 moves to 18, which is the same 6,000 getting added to 32, 33 to make it 38 to 40. You're absolutely right.
Okay, so we are looking at a very handsome market share gain this year, basically. Definitely, because 15-20% growth in the revenue terms we're talking about.
In other words, yes. Yes, in other words, yes.
Understood. And lastly, what are your expectations on sanitary and faucets as a business for us? Because earlier last call you guided for 35 to 40% growth.
Yeah, so I'm still looking forward to a 30+% growth in that segment.
Okay, understood. Sure, thanks and all the best. Appreciate it.
Thank you.
Thank you. Ladies and gentlemen, the management would be taking last two questions. The next question is from the line of Srinjana Mittal from Ratnatraya Capital. Kindly proceed.
Hi. I just wanted to ask a question on a quarter-on-quarter basis. If you can help us understand what is there any increase in the non-fuel RM costs also? Because quarter-on-quarter gross margins have come down, whereas fuel costs have broadly quarter-on-quarter tracking level, they're kind of held up, not gone up so much. Is there something there, or is it just a sort of a?
Yes, even there, all our glazes are exposed to fuel because there also the firing is done on natural gas, so that also went up. Some raw materials, imported raw materials, Ukrainian clay, etc., went up. But again, we don't use much of it, so I don't want to talk too much about that. But yes, the glazes went up, and a lot of the compounds for the glazes come from abroad. Freight rates were still high. Now they've started coming off, so that also went up. Paper was something which went up in the early part of last quarter, but then started stabilizing.
Understood.
And as you know, fuel prices going up, which made a difference in our freight cost, inward freight cost also had a major difference where diesel went up. So overall, I think the biggest culprit remains to be fuel and anything which was exposed to fuel.
Understood. Very clear. Thank you so much.
Thank you.
Thank you. The next question is from the line of Aksh Vora from Praj Financials. Kindly proceed.
Yeah. Hi, sir. Just wanted to know, our debt has increased a bit. Do we have any plans to reduce it going forward in, say, a couple of years, or any target on debt figure?
No, that really hasn't increased. I think Zunit can give you an overview of that.
All right.
Zunit?
Yeah. So can you just quickly touch your precise point, Aksh?
Sorry, I just wanted to know if we have any debt reduction target in next couple of years. Currently, our net debt is around 359 crores. So if that would reduce to sizable amount, or it will stay in the same range? I just wanted your view.
So certainly it would reduce going forward, because larger part of it is the term debt, and which has the amortization schedule, and that too specifically in a much bigger size in one particular company, that is the South plant, where we had the initial project loan, the first phase, and then some expansion. So we took another ticket size of term loan. And so on an average, on a consolidated basis, we keep repaying around 55 to 45 to 50 crore rupee annually. So that is something which will keep reducing year on year. However, there would be in tandem increase in short-term borrowings in the shape of working capital, but obviously that would not be to that extent. So year on year basis, obviously there would be reduction in total debt gradually. But as far as any reduction plan is concerned, there is no reduction plan as such. Since we have made this clarification earlier as well, that debt is more relevant number for us on a standalone basis, and in a standalone you will see there is hardly any debt. Precisely, there is no debt. It's the more of a bill discounting facility, which is actually in a way a trade payable, but because of accounting reporting shift from the trade payables to the short-term borrowing. Otherwise, there is no debt as such on a standalone basis.
All right. Thanks a lot, sir, for that clarification. Also, just wanted to know our tiles utilization levels are pretty high. So by probably next year, we'll be adding some more capacity. But is there any major expansion plan going forward in next year or so? Because we are almost reaching peak capacity utilization, I think so. I understand we have tie-ups with JVs and other vendors. But do we intend to take any significant expansion in capacities?
As of now, it's the Max plant which we are focusing on. So probably 6 months down the line, we should be in a better position to talk about that once we have also got a BI as to how deep rooted this muted demand is.
All right. Yeah, appreciate, sir. Thanks.
Thank you.
Thank you very much. That was the last question in the queue. I would now like to hand the conference over to Mr. Somany for closing comments.
Shailesh, I'd like you to do the closing comments.
Thank you, Mr. Somany. Thank you all the participants to this conference. This has been, as Mr. Somany said, this has been a tough quarter, not only for us, but for the industry in general. But I think forward to a profitable next quarter, right? We should have our operating margins increasing with two factors happening. Factor number one is what Mr. Somany expressed, the conversion from RLNG to LPG. I think we are moving there, so which should in any case get us some delta in the margin. Plus we are seeing softening of gas prices also. So these two are the factors. If nothing goes drastically wrong from there, I think we are looking for a good next quarter and a good next half year.
Thank you, everyone, and we shall welcome you again for the earnings call of Q3.
Thank you.
Thank you. Thank you.
On behalf of SKP Securities Limited, that concludes this conference. Thank you for joining us. You may now disconnect.